Before we begin, we want to go ahead and share our disclosures. Any symbols you see today, any companies that we discuss, should not be inferred as a trader recommendation. Before any type of investing, you should take the time to do your own due diligence and see if this investment matches who you are as a trader. Stock, forex, futures, options all have a level of risk associated with them. You can lose your money. It's important that you are aware of all risk involved with any trading decision that you make. Any strategies, any symbols, any setups that we discuss are purely for informational purposes only. Future results are not guaranteed. And once again, any investment decision you make is still in your own responsibility. Trade at your own risk.
Hello traders, I'm Michael Glass, michaelglass.com with today's You Make the Call. In each You Make the Call video, we take the time to look at some of the market's most biggest and popular stocks by discussing their market buzz, what the mood of the traders are, or what some of the analysts are projecting for that stock. We'll also look at the market news, what news has come out or is scheduled to come out that can change the sentiment, that can change the trend for that stock. And finally, we'll discuss the key technical analysis points that every trader should know before making the call on whether it's a buy or a sell. Today's You Make the Call stock is Facebook. Let's take a look. I'm sure what most traders were looking for was that traditional first day bump. And for those long-term traders, I'm sure they were hoping to see the returns like a Google IPO where it just took off to the moon. That being said, the IPO occurred on Friday, May 18th. The build-up anticipation was incredible. That demand to participate in the Facebook IPO raised the opening share range to $32 to $38. That valued the IPO at over $100 billion, making it the largest internet IPO in history. And even with the hype, and even with the demand, the Facebook IPO has turned into a Wall Street debacle. And here's why. The Facebook IPO went bad right from the start. As we all know, the market opens at 9:30 a.m. But that's not when Facebook, under the symbol FB, opened. NASDAQ told investors that Facebook would eventually open at 11 a.m. Didn't happen at 11 a.m. Eventually opened up for trading at 11:30. Now, some of the things that went wrong was that NASDAQ had one pricing model to handle all the execution of the trades. As the delay continued, many traders, seeing the value go up and down, began to alter their trades, the price that they want to enter their trades. So as they're going through their broker to change their buy and sell prices, that began to mess up the first model. So NASDAQ switched to a second model, which allowed the IPO to occur at 11:30. But of course, what that led to, as NASDAQ declared, a technical error, was a lot of confusion. Many traders didn't know if they had positions. Many traders didn't receive confirmation for hours later. Some traders didn't even find out whether they did or did not have shares until the next day. And of course, no one liked the prices that their trades were executed at. So the question is NASDAQ had the technical error, why are investors suing Facebook? The reason that there's a lot of legal action going into Facebook has to do to a regulatory investigation into how Facebook handled its IPO. A group of Facebook shareholders are suing Facebook because they believe that Facebook disclosed the information to some of the financial banks handling the IPO. Primarily, we're all hearing about Morgan Stanley, lowering their earning estimates. And Morgan Stanley, in turn, told some of their institutional investors. Now, the reason why that's important is that's going to affect demand. In addition to the NASDAQ technical glitch, we also had lower demand. This could have been one of the reasons why we didn't see the traditional IPO pop. In conjunction with what was going on with Morgan Stanley, we also saw Goldman-Sachs, JP Morgan, and Bank of America also lower their future earnings estimate all to about the same price level at the same time prior to the IPO. Certainly doesn't look on the up and up. Wall Street right now is also reporting that the banks made about $100 million short in the stock. Because when there wasn't any demand, the banks had to prop up the stock by using some of their trading desks to hold the stock up. And as the stock has fallen, they've made about $100 million. So again, right now we're seeing a lot of negative sentiment to Facebook. We saw right before the IPO, General Motors say that they're pulling $10 million from advertising because they don't see the return on investment. Now Ford immediately came out and said we are seeing a return on investment. It's all about how you use Facebook. Then we had the technical glitch with all of the order execution, which again, with all that build-up anticipation and demand, did not see the pop. And then finally, we see that potentially Facebook shared some information specifically to what some analysts are saying. What they don't like about Facebook is currently, in the current model, Facebook is not pushing out ads, it's not making money off of the mobile devices, the iPad devices. So for all you Facebook users, get ready for that to happen. But all of those things have led to a negative sentiment right now on Facebook. Let's go ahead and pull up some of the key technical analysis points that you should be watching.
So as we pull up the charts to take a look at Facebook, we can see that 1 week of action, and we're really not going to get a lot of data off of that. So I'm going to switch off of daily and switch down here to the hourly. And we really get a good look at what's going on here, at least in the short term. And our indicators are basically, we're heading down to oversold, and then we're going to cross over here on stochastics, RSI starting to angle up, MACD trying to head up. So that's showing a little strength, but overall we can see that the price action really is sideways. A better way of looking at that is, I'm just going to pull up the chart. Again, our daily is not really working, so when I come in here into our hourly, we really get a good view of this sideways price action pretty much for the majority of this week. Our Friday price action, would you hate to be this person up here, $45. And then Monday, more push down. And then here we are Tuesday through Friday in a nice tight range, support of 31, resistance of 33. We can see our point of control is right in between here at 32, 31.88. And you can see even if we get above 33, our next price point as far as volume resistance is going to be around 38. So if we can get above this 33 price range, we can certainly head up and start to retest what's going on this gap down from Friday to Monday. Not a lot of volume. This is basically straight selling, and you can see that on our market profile, that on that selling, not a lot of volume accumulate, just flat out selling. So we really need to get above 35 to start pushing towards 33. So to sum up what we're looking at as far as our key technical analysis points, we can see that our trend on the hourly is sideways to down. We're not really going to see a trend here on the daily or the monthly because we haven't, it's only been trading for a week. I would say sideways at best. As we look at our three musketeers, stochastic, RSI, MACD, they're all showing sideways. Our points of interest is support at 31, our resistance at 33, and our point of control is at 31.88. Is Facebook a buy or a sell? You make the call.